Which would you choose, $8 million or 10? What would have happened if you invested in TECL vs TQQQ? Today, we're exploring the performance of these two exchange-traded funds, the Direxion Daily Technology Bull 3X ETF, or TECL, and the ProShares UltraPro QQQ, known as TQQ. But how do they stack up against each other? To answer this question, we'll look at several key metrics. We'll compare their initial and final balances, analyze their compound annual growth rates, or CAGRs, and review their yearly performance. We'll also take into account their maximum drawdowns, expense ratios, and dividend yields. Lastly, there is a twist at the end that could change everything. So, are you ready? Let's kick off this comparison with the initial and final balance of both ETFs. Imagine you invested $10,000 in both TQQQ or TECL. Fast forward to the present, TQQQ's final balance reached a whopping $803,903. Not far behind TECL, sitting at $733,332. Now let's delve a bit deeper and look at the compound annual growth rate, or CAGR. TQQQ exhibited a CAGR of 39.54%, slightly edging out TECL's CAGR of 38.57%. This tells us that TQQQ had a marginally better annual growth over the past 13 years. While TQQ shows a slightly higher final balance, the CAGR is a close contest. But what's the catch? Over the years, both ProShares UltraPro QQQ and Direxion Daily Technology Bull 3X ETF have seen significant ups and downs. The best years have brought substantial gains, while the worst have tested investors with hefty losses. So let's turn our attention to the maximum drawdowns. Direxion Daily Technology Bull 3X ETF has experienced a maximum drawdown of 74.32%. While TQQQ has seen a slightly steeper decline at 79.08%. A lower drawdown, as TECL, indicates a lesser reduction in portfolio value during market downturns. So, despite TQQQ's edge in yearly performance, TECL holds its ground with a lower max drawdown. But what does it cost us, and what's the payoff? Let's look at the expense ratio and dividend yield. In this case, ProShares UltraPro QQQ, or TQQQ, boasts an expense ratio of 0.88%. On the flip side, Direxion Daily Technology Bull 3X, or TECL, stands slightly higher at 0.92%. Moving on to dividend yield, a key factor for income-focused investors, we see a fourfold difference. Are you ready? Because TQQQ has a dividend yield of 1.14%, while TECL trails significantly with a yield of 0.28%. These numbers may seem small, but remember, in the world of investing, every fraction of a percent can make a difference. In this round, TQQQ seems to take the lead again with a lower expense ratio and higher dividend yield. Remember that twist? This one thing is crucial to understand to take almost any portfolio to 1 million plus. Finally, let's explore the concept of dollar cost averaging and how it impacts our two ETFs. Dollar cost averaging is a strategy where you invest a fixed amount of money at regular intervals, regardless of the share price. Over time, this can help reduce the impact of volatility on your investment. Now, here it is. Applying this strategy to our two ETFs, we find some interesting results. Both TQQQ and TECL started with an initial balance of $10,000. But with dollar cost averaging $2,500 a month, TECL ended with a higher final balance of over $10 million, compared to TQQ's $8.5 million. Additionally, both ETFs achieved impressive compound annual growth rates, or CAGR, with TECL slightly edging out TQQQ. The same trend applies to the time-weighted rate of return and money-weighted rate of return, with TECL showing slightly better performance. While both ETFs show impressive growth, TECL takes the lead in terms of final balance when using dollar cost averaging. However, there is one more thing that you need to hear, otherwise it could spell doom, so hang on. But first, after a detailed analysis, which ETF outperforms the other? We've seen that both ProShares UltraPro QQQ and Direxion Daily Technology Bull 3X ETF have exhibited impressive growth rates and substantial final balances. ProShares UltraPro QQQ exhibits a slightly higher compound annual growth rate and a better performance in minimizing losses during the worst year. However, Direxion Daily Technology Bull 3 X ETF holds its own with a lower maximum drawdown and a higher final balance when dollar cost averaging is factored in. Expense ratios and dividend yields also play a part, with ProShares UltraPro QQQ having a lower expense ratio and a higher dividend yield. The time-weighted rate of return and money-weighted rate of return also show close competition between the two. While both ETFs have their strengths, here is the one thing that could save your portfolio from doom. It's all about your investment goals, risk tolerance, and you picking the best ETF for you, because you've taken the time to know yourself.